Well, in what else is brewing today, Y Combinator-backed API banking platform Decentro has closed a 30 crore Series B funding round that was led by InfoEdge Ventures. It will also be reversing its parent entity's location from Singapore back to India in the next 12 to 18 months. Now, founded in 2020, Decentro offers payment aggregator, KYC, data intelligence and debt collection services to more than 1,300 companies, and that includes your NBFCs, Fintechs, digital lenders and banks. For more on their plans ahead, let me invite Rohit Taneja, who is the co-founder and CEO of Decentro. Rohit, welcome to Startup Street. Let's start with the decision to flip back from Singapore to India. It seems to be becoming the traditional startup playbook, really. What's driving the reversal, and how do you see the regulatory environment here supporting a move like this right now?
Oh, thank you for having me here. You're right, absolutely. I think in the last almost 1 year, more than that actually, 1 to 2 years, you've seen like a wave of companies, just flipping back from US to India or Singapore to India. And I think it's a good trend in general. I'm pretty sure most of the people who are founders in those companies are happy with that, because ultimately this is where we see a lot of public market returns and the next set of investors coming in from. I think the regulatory environment is also very helpful, obviously from a public market perspective. We see much more exits coming out. We see a lot of more opportunities on M&A as well, and domestic investors getting really savvy, both retail and domestic institutional investors. I think that's really what's driving us, and probably the rest of the market as well.
Well, but if I may ask you, I mean, it's very early. I know you're going to still take some more time, but what is the estimated cost of this flipping? Because we've been listening to some big numbers, whether that is PhonePe or Razorpay that have recently done it. PhonePe, had to shell out as much as $1 billion. What is the cost you're estimating, and what is the timeline you're looking at?
Yeah, so that's where things get interesting. What happens is, if you look at the US to India flip, you actually have to pay a lot of tax. There's no way to avoid that tax. Interestingly, in our case, we are Singapore domiciled from an HQ perspective, and Singapore has a zero tax option, where you don't have to pay a tax at all. And in fact, if you look at Pine Labs, that is the best example. So Pine Labs had to pay zero tax, and they're still, of course, I think 75% through in the process, but should be completing the remaining 25% very soon. So we're following in their footsteps. So in our case, we actually estimate zero tax, in a good scenario. There obviously will be administrative and legal costs, those will be there. Early to estimate those, but yeah, tax-wise, we're good.
Okay, well, let's get to that 30 crore Series B funding round. Then, what is the capital for? How do you plan to deploy it?
Yeah, sure, absolutely. So we recently started targeting a lot of enterprises. I think if you look at the logos as well on the website, we've had a lot of early stage to mid stage, and late stage startups, right, both across India and global. And recently we have started noticing a wave of NBFCs, banks, large scale NBFCs and banks really coming to us, both inbound as well as outbound efforts. And I think that requires a slightly different cadence in terms of the enterprise cycles, the compliance required, the product involvement, tech involvement. And so most of this is really going towards that.
All right. You also, claim to be a profitable entity. But what are the numbers? Give us a sense of where your top line is, where your bottom line is, and what sort of target you have, say, for the next 2-3 years in terms of growth.
Sure, absolutely. So I won't share the absolute numbers, but I can definitely tell you we are in the mid-range of, I would say, double-digit CRs. So you can estimate, I would say, 3x growth once we officially report the numbers of FY25. FY26, we're looking at, again, similar 2x to 3x growth, I would say. And with roughly 60 to 70% gross margins. That's the usual range that we're looking at.
And what will be the growth driver for this 2x and 3x kind of growth that you're talking about? Oh. Which part of the business?
Yeah, absolutely. Interestingly, there will be two major lines that are really helping us. I think one is payments itself. So payments is, of course, one of our top most revenue driver. It currently contributes close to around 70-75% of our revenue. We estimate that to continue to contribute at least 60%, somewhere to that scale. So just doubling down on the existing payment volumes, existing customers, increasing their payment volumes. That's one. The second one is from these new enterprise logos. So the ones I mentioned, the large banks, large NBFCs going forward. There we essentially will be selling a couple of new modules on the KYC and debt collection side. So we have something called Scanner, I think, which we were showcasing a while back, which essentially allows a lot of these lenders to really profile users, in terms of fraud prevention. So they're able to go into much details of the user's profile, digital profile, their device intelligence, etc. Very interesting product for them.
Yeah.
And the second is, of course, your loan collections. This is an inorganic opportunity. We actually acquired a small company 2-3 years ago, close to, I think, 2.5 years ago. And there we have launched a full-fledged AI voice bot that is able to do loan collections for you and able to replace the human caller. So, yeah.
All right. Finally, let me ask you, you're dabbling in multiple things. You got that payment aggregator license. You're doing debt collections for banks and NBFCs, KYC and data intelligence and so on. Is there any other adjacent, more lucrative products you're looking at adding to your bouquet of services?
Not at the moment. I think these products will keep us, quite busy for a while. So I don't think we intend to shift away from, the existing set of products. But just doing a lot of upsell and cross-sell, and you can see a lot of these have common customer cohorts like fintechs, NBFCs, banks. They come across all these entire cohorts end to end. And yeah, so I think we see a lot of upsell, cross-sell in that. I think that's really going to be one of the key focus areas.
Well, Rohit, we'll leave it at that. Thank you so much for your time here today. It was a pleasure speaking with you.
Thank you. Thank you so much.
Well, on that note,